Morning traders. Excuse me. Good morning traders. It's 8:01 a.m. Chicago time. Wow, need to clear my throat. It's 8:01 in Chicago time on Thursday, the 20 what is it? The 27th of October 2016. Thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I need to get my act together. Um, The key news overnight is the Tesla release after market. It was expected to show a loss. It showed a profit, but mainly due to a change in the way it does its accounting. Overnight, the driver has been the UK GDP came in at 0.5% versus 0.3, which is basically showing that they're shrugging off the Brexit effect right now. And then also China's industrials showed a 7.7% year-on-year increase. That's also good news. The additional news from Europe is that Deutsche Bank reported a net profit in the high 200 millions. I think it was 287 or something, 287 million euros versus a loss, an expected loss. Overall, the mode of the market has been towards allocation to risk. The market has been trending up in the overnight session. We'll look at that in a moment. As far as what's driving us this morning, I want to remind everyone that there are comments coming out of OPEC. There are comments coming out of OPEC right now. Saudi Arabia is asking proposed to Russia that it should cut 4% of output. Russia responded by saying that it would only be able to freeze production but not cut. We're seeing some volatility in crude oil, and it'll continue. And that's it. As far as what we're expecting for today, going forward, we're looking for pending home sales at 10 Eastern, expecting 1.1%. That could be a mover. And then we're expecting EIA natural gas at 10:30 Eastern. As far as speakers, we had Nowotny about an hour ago. We have Nowotny again right now, starting about 4 minutes ago. And then we have ECB speaker Mersch at 1 p.m. Eastern. And then after the market, we have Amazon, LinkedIn, Twitter, and Google. So keep an eye out for that. And then, of course, there's a new 7-year note auction at 1 p.m. Eastern today for those who are looking at the treasuries. Let's switch gears and look at where we expected to be yesterday. Here are the primary ideas for the day. Okay. The market yesterday was expected to open around the 21.28 handle. The expectation was for a choppy open, a tight open auction, and for it to drop down through the overnight low. The overnight session yesterday, if you watch yesterday's video before the market, Twitter reported this morning. I apologize. I didn't catch up on the earnings reports yet. Um, the If you look at yesterday's video, you'll see that the overnight session setup was set up in such a way that we expected a breach of that overnight low with a high probability. That breach is represented here, and then the expectation is it would likely turn up and chop around towards the 21.35 area or so. Just basically chop in an upward skew is what was expected on Hypo 1. Hypo 2, again, the same thing, test below yesterday's low and then an aggressive move towards 21.35. We're looking for an aggressive push up, responsive buying to 21.35. And the expectation there is that we would see a substantial amount of resistance there on the first try at 21.35. As I said, I would be a seller. My plan is to be a seller in that area, even if it's on an impulsive move there. The third hypothesis is for a again an open auction, no initiative selling, no selling at the beginning, and an immediate push. And the market takes on a responsive play and starts to move towards that 2135 before it sees selling, and it's likely to rotate over and start pushing down into the 212050 naked point of control. Here's what we actually got. This is what we actually saw yesterday. We had a pretty interesting push up on the crude oil inventories. Our surprise came in with a large deficit. The market did what we expected it to do. The overnight low is around here, 2126.50. It pushed to 24.75. So we had hypo 1 or 2 in play. And then with 1, the expectation is it would drop and then go sideways in an upward skew, right? And it looked good over here. But then crude came in, and here's the first tag of the first test of 35. You saw the push up and the rotation down. It only got 9 ticks. This was part of an impulsive move up, and then the market basically pushed 2140 and then rolled right over. And when it rolled over, it did not hold the mid, it did not hold anything for a bounce back up and move back into the range. So that set us up for a push down through the opening swing, and it did not get through the opening swing. It poked in, but it didn't get to the other side. So the expectation here was for hypo 3, which was push up, right? Push up, pull back, uh, uh, push back into towards the yesterday's range, and then start to move lower. So there was not a clean, none of the 3 key plans played out yesterday with this news on oil that created this impulsive move, and it just did not respect. In either case, in both directions, it just did not respect any of the key levels on a on a day time frame basis, which tells us that a higher time frame was in play, and it's always tricky. As far as the overnight session, let's get rid of these, they're no longer relevant. The overnight session, you can see here that we opened and went sideways on the European session until we got the China numbers. I think it was right here. And then on the European Open, we just have this rocket ship takeoff type thing. The A lot of the volume went off right against yesterday's point of control, and we've pushed out of yesterday's range. So we're showing a gap this morning. There's really no, it's kind of a grindy move up. There's really no sign of weakness here. And it does look like, we've pushed through the prior week's high, and it does look like it's likely to open in this gap. So in that situation, I'm going to cut back on this, pull back this composite here, and do what? In this situation, we're going to draw a new composite. It's basically folding back over on itself. And so now we want to see what the key areas are from the last 3 days, because the market's moved down and it's pushing back up. So we want to see where the key volume areas are. And there's the big one right there. This is the 2144.50. Remember, that's the number we got stuck at on Monday. That was the low volume node right here, the key low volume node, as it's marked right here. So we have two clear prongs, high volume nodes, and we are in the upper one. I'm going to be watching out for this 2140 area, this low volume node, for a reaction. So this morning, the expectation, to get down to what we're expecting for today, this morning, the expectation is for a responsive selling down into the 2140. I expect it to bounce around, push up to 2144.75, push through, and then find sellers again as we have in the past, and then just hold steady there. The market's bopping around all over the place, so it's not getting a good foundation or a good base to run away from this area. It's also not getting the news to feed it. So the primary hypothesis looks like this. The expectation is for a push down into 2140. It's likely to push into yesterday's range a little bit, and then bounce up and then just basically get stuck at 2144.50 again. I expect us to end up with a profile that looks something like belly, thin, small belly below. A sort of a double distribution profile is what's expected for today. The the secondary hypothesis is to push up to try to continue this move, continue higher, and then find sellers, come back in, and then retest this 2135, 2137 area, and then potentially push to 2135, which is a key area for us on the prior composite. That's the secondary hypothesis. Okay. There, I can go into 3 and 4, and there's a lot that could happen here. We are in a gap, but we are in a 3-day consolidation area. The tertiary idea is to open up, leave the gap open below us if it doesn't close before the open here, and then walk away with an initiative push, which takes us to 2152 or 54. Let me drag it up here. So that's the third hypothesis, but the expectation is for a push towards the level that was up here. Let's roll that up. There it is, 53 actually, 2153. This would be the target for hypo 3, which is not far. It's only about 11 points away right now, but if it pulls back a little bit, it's still within a day's range on the buy side. Anyway, that's what I had for you today. Stage 5 traders, we have a webinar at noon. You'll see the invite for that in your email here shortly. Everyone else, good luck. Just stay calm and wait for your setups. Wait for the market to really talk to you before you commit. Take care.